Hey guys, welcome back. What an amazing day we saw today. All members of the Fab Four, the Memory Titans, broke through their ceiling. They're all flying in blue sky territory right now. It was an awesome day on the market for the sector overall. And if you've been following this channel for a while, I have been laying out a very specific thesis over the last few weeks. It's the idea that the next explosive leg of the AI trade belongs to anyone that's helping work through the physical constraints or the bottlenecks that we see in the market. The bottlenecks that are surrounding the GPU or the bottlenecks that are holding back the AI infrastructure build out. Today's trading session gave us the ultimate validation of that setup. What we saw today was the memory sector just go absolutely vertical. Today, we're going to look at that raw data from the sector overall, from the Fab Four, the Memory Titans, and we're going to break down, or I'm going to break down the three massive narratives right now that are shifting the sector behind the scenes. I'm going to map out our tactical game plan for tomorrow's opening bell, and I'm going to give you my aggressive growth pick stock. My aggressive growth pick, let's say, the stock that I think is going to have a massive June. It's going to be the last part of the video, so make sure you hang on and stay to the end and you get that pick overall, because you may be surprised at who I think will be the most aggressive or has a chance to have significant aggressive growth throughout the month of June. So let's dive into the video. Let's start the tape, but if you haven't done it already, make sure you hit like. Make sure you hit subscribe to the channel. Guys, I want to grow this channel up over 20,000 within the next couple of days. We probably need about another 120 subscribers. I take that back. We need another 1,100 subscribers in the next few days. Let's see if we can do it. Let's see if we can reach that level together. But thanks for all your support. Thanks for all your engagement on the channel. Let's dive in and get started on our first narrative. First, to understand why the memory tape completely decoupled from the broader market today, we have to look past the standard retail hype and focus on the core engineering bottleneck that is plaguing modern cloud data centers. Right now, Wall Street is facing an immediate architectural crisis. It's all related to the capacity and the bandwidth imbalance. Over the last 12 months, AI processing speeds have skyrocketed roughly 3x, driven by unrelenting GPU scaling. Yet over that same exact period of time, raw memory capacity has only managed to increase by a meager 1.5x. So you can build the fastest computing engine in human history, but if the pipeline feeding that engine the data is only half the size it needs to be, your multi-billion-dollar GPU cluster spends precious time just idling. High-performance computing, it demands massive immediate throughput. And if you think that's an exaggeration, take a look at the data I'm going to pull up on your screen right now from the semiconductor research firm SemiAnalysis. So let's pull up that article and we can walk through it together. You can see the title of the article is The Memory Wall, Past, Present, and Future. But I want to focus you on this chart right here, which is plotting out the Nvidia GPU progression. Look at the yellow line in the chart that's mapping out Nvidia's GPU progression and raw computing power. As the architecture scales up to the newest generation platforms, peak compute performance, it goes absolutely vertical. It's skyrocketing from under 2,000 teraflops on the H100 generation all the way to a staggering 10,000 teraflops. But now look at the blue line directly underneath it. That's tracking memory bandwidth in gigabytes per second. It doesn't skyrocket. In fact, it doesn't even triple. It's crawling from about 3,300 gigabytes per second to just 8,000 gigabytes per second. That massive canyon that's opening up right there on the graph between the yellow line and the blue line, that is the physical memory wall in action. The brains are getting exponentially faster, but the pipeline feeding the brain the data, it is hitting a brick wall. And here's the insight that you need to understand today. This capacity wall is getting exponentially worse, because data centers are suddenly shifting their capital layout back to general purpose servers to handle the live production level AI inference workloads. And inference demands a completely different scale of memory architecture. In inference overall, instead of just the hyperscalers, instead of buying ultra premium specialty chips, they are now suddenly forced to aggressively procure massive volumes of standard registered DIMMs to feed general purchase server grids. The memory trade has fundamentally widened. It is no longer just an isolated hardware story. It is a sweeping multi-tiered capacity crunch hitting the global supply matrix just as supply inventory levels sit at historic lows. So why is this an absolute gold mine for the memory sector? Because it comes down to basic economics. Inelastic demand meeting hard cap supply. Hyperscalers cannot let their multi-billion-dollar GPUs sit idle. They are forced to buy massive volumes of standard DRAMs to feed those inference grids. And because supplier inventory is at historic lows, the memory giants hold all the cards right now. They have 100% pricing power, and they are using it to systematically reset baseline hardware margin. The second massive story that influenced the memory sector and dominated the institutional trading desk today was the staggering Q1 data that was released by TrendForce. So let me pull that up and we can walk through that together as well. So you can see this article right here. Rapid contract price surge drives Q1 2026 DRAM industry up 81% quarter over quarter, says TrendForce. Guys, this global DRAM industry revenue, it didn't just grow, as you can see. It exploded by 81%. And you can see down in the highlighted below that last line of the first paragraph that this surge contributed to an overall industry revenue increase by 81%, reaching $97 billion. But here's the insight you need to understand. This revenue explosion, it wasn't driven by volume expansion. It was driven by absolute pricing squeeze. Contract prices for conventional DRAM skyrocketed by an unprecedented 93 to 98% quarter over quarter. And you can see that in the first line that I've highlighted here. Contract prices for conventional DRAM increased by approximately 93 to 98%. Because the top three suppliers right now, they are ruthlessly prioritizing their clean room space for high margin AI server memory. Product availability for legacy clients like PC OEMs and smartphone vendors have effectively been choked off. We are witnessing a structural crowding out effect. Cloud service providers have demonstrated a total willingness to absorb these aggressive price hikes to secure allocation, which is forcing traditional consumer electronic companies to follow suit just to stay alive. TrendForce is already forecasting conventional DRAM prices to track another, you can see right here, another 58 to 63% quarter on quarter in Q2 of this year. This isn't a temporary spike. This is a systematic resetting of the baseline hardware margins that we're seeing in the memory sector right now. This is giving them absolute pricing power. What we're seeing in Q1 and what we expect to see in Q2 right now. The memory providers are in fire because it's not just DRAM where they're seeing massive pricing power, but it also is in NAND, and we're also seeing in HDDs as well. Finally, let's talk about the third story that had a massive influence on the memory sector today. Because if you want to know where the smart money is moving, you stop looking at sentiment and start looking at physical shipments. I'm going to pull up some data that comes straight from South Korea. It's their latest trade data, and it's showing significant year-over-year export growth in May of 2026. So let me pull that up and we can walk through it together. But guys, you can see the article itself. South Korea's 169% semiconductor exports supports AI stocks, but treasury yields remain the key risk. I want to drive you down to this, right here. This graph that you can see is titled Record Semiconductor Exports Lift AI-Linked Equity Markets. Guys, look at the massive divergence that we see here. While South Korea, while their general economy and their total exports, it grew by a healthy 53%. That's the bar on the far left. The semiconductor exports, they exploded by 169%. And the computer hardware exports, those skyrocketed by a mind-blowing 291% year over year. This is undeniably bullish for the memory sector because South Korea is the world's primary kitchen for DRAM and high-capacity memory architecture. They aren't just shipping concepts or software promises. They are physically shipping massive, heavy hardware blocks out of their ports to satisfy the global tech shortage. And when semiconductor exports outpace total exports by nearly 3x, and hardware computer components outpace it by nearly 6x, it proves that the AI hardware infrastructure build-out is accelerating at a historic clip. Capital is being forcefully transferred into physical chips, and companies providing that hardware are capturing the pure pricing power. That's exactly what we're seeing with the memory providers right now in the market. So let's look at how all of these stories actually translated into the closing numbers for the Fab 4 of the memory titans and what they did on the market today. So let me pull that up and we'll go around the horn and take a look at the performance overall. Because as I said in the beginning of the video, this was an historic day today. We're in blue sky territory for all of these stocks. They massively broke through the ceiling and they all achieved new 52-week high today. Take a look at Micron. We have done it. We have hit the $1,000 mark. We've been tracking this for so long in the channel. We finally did it. We closed at $1,034.60, up over 6.5% today, almost a $64 gain. Right now in the after hours, pulling back a little bit. I'm going to talk about that and close my video, what I expect to see tomorrow with Micron. But you can see we closed pretty much at its 52-week high, about $5 off it overall. If I jump over to SanDisk also had a strong day, about a 4% gain, $66, almost $67. It closed at $17.61, just under $17.62. Take a look at to the right. Look at the 52-week high or the intraday. It actually hit over 1,800 today. We're also seeing a little bit of pullback, almost about a 2%, little under 2% right now in the pre-market or the after hours. If I jump over to Western Digital, also achieved a new 52-week high today. Got up to $5.64 at one point today. Closed at a $15 gain, almost a 3% jump. It's at $546.54 right now. A little bit of pullback in the after hours as well. And finally, Seagate closed at 4.71% growth, almost a $42 gain, just about a $41.50 gain. It closed at $921.26. Look at the 52-week high to the right, $940. So all of them achieved significant growth today. All of them achieved new 52-week highs. This was such a strong day for the sector overall today. It's exactly what we've been tracking. It's exactly what we thought we would see. We know we've been all tracking to see Micron break through that $1,000 ceiling. It did it today, and man, it felt good. So how do we play this trade? How do we play this sector and these memory titans tomorrow without falling into the retail trap? First, I would expect a massive wave of price target revisions, of re-ratings overall, because just this morning, Raymond James, they effectively doubled their forecast in Micron. They aggressively lifted their price target from 530 all the way up to 1100. As more legacy analysts are forced to update their models based on the realities that we see in the market, the pricing leverage that we see from the memory companies, we're seeing 90% plus contract pricing power with these companies. They're pricing hikes right now. So we're going to see massive re-ratings, and the underlying institutional bid for Micron and the memory titans will remain incredibly strong. Second, we are only 23 days away from Micron's fiscal Q3 earnings on June 24th. The street is modeling a 263% year-over-year revenue jump to about $34 billion. The market is clearly forward running this print right now. If Micron hints on that call that their Q4 forward guidance is pacing towards $40 billion, the stock's forward valuation compressed significantly today. But here's my advice for tomorrow. Do not chase the morning gap blindly. When an asset like Micron did today, when it breaks a massive psychological barrier like the $1,000 price mark or the $1,000 share mark, short-term momentum desks will frequently take profit and they'll try to shake out the weak hands. So watch that 10.15 or the 10.20 range on Micron tomorrow. If the morning reversal window tests that zone and algorithmic buyers step in to defend it, that will turn old resistance into a new structural floor. That will be your validation. Use sector pullbacks to step in alongside the smart money if that's what we see happening overall. Now I want to get to that aggressive growth pick that I talked at the beginning of the video, because if you're looking to deploy capital over the next 4 weeks into an asset where the market is severely underestimating the true velocity of its earnings expansion, I would look no further. I would look directly at Broadcom. Broadcom, let's pull it up. Let's take a look how it's performing overall. And so you can clearly see Broadcom had another strong day today. Up over $13, almost 3%, closed just under $460 overall. And let's be real on the channel. At first glance, Broadcom doesn't look cheap. The stock is coming off a massive multi-month run, and it trades at a premium forward PE multiple. But standard valuation metrics completely fail when a company's growth is accelerating as fast as we're seeing with Broadcom. If you look at Broadcom's PEG ratio right now, it sits in an incredibly low 0.6. Let me show you that. I'll pull it up on the screen. You can see it. I called it right here. The Broadcom's last 12-month PEG ratio is 0.6 overall. When you have a PEG ratio that is under 1, it means the stock is mispriced relative to its exploding trajectory. And just this afternoon, Broadcom, it dropped a massive market-shifting announcement that shows exactly why this growth is accelerating. I can pull that up and show you too. You can see here in investing.com, Broadcom unveils a Wi-Fi 8 50G broadband chip for AI applications. So they officially unveiled this comprehensive edge AI broadband portfolio featuring the world's first 50G PON home gateway system on chip and native Wi-Fi 8 platforms. Think about the structural narrative here overall. For the past year, as conversational AI assistants and real-time agentic software scale, the bottleneck shifts to latency and bandwidth at the consumer edge. Broadcom's new chips integrate dedicated neural processing units, or NPUs, directly onto the broadband gateway. This means the router at the edge can now process AI workloads locally, dynamically routing compute between the cloud and the home premises while delivering sub-millisecond multi-gigabyte connectivity. This is a massive high-margin product cycle hitting the tape exactly before the company heads into its Q2 earnings this Wednesday. Wall Street is modeling a massive 47% year-over-year revenue jump to about $22 billion with Broadcom. And AI chip sales are expected to cross a staggering $10.7 billion. In fact, HSBC even came out this morning noting that Broadcom's custom chip programs are set to materially ramp past the street's current models through the second half of this year. Once the market fully realizes that Broadcom has officially cornered both the back-end data center network and the front-end AI edge infrastructure, this stock is primed to lead the next major breakout leg over the current month. So as I said in the beginning, if you're looking to invest capital over the next 4 weeks, if I'm going to pick Broadcom as a strong, aggressive growth stock that you can consider. Guys, the bottom line is this. The AI race has matured past speculative software promises. It is a physical capacity and a connectivity race. The data from TrendForce, the exploding global export numbers, and Broadcom's massive edge silicon rollout today all confirm that the market is aggressively re-rating the physical infrastructure layer. Drop your comments below. Let me know what you think about these stories overall. And I also want to know, are you holding Micron past this breakout level of 1,000? Are you going to load the boat with Broadcom's new Wi-Fi 8 and 50G gateway catalyst? Are you going to do both? Because that's exactly what I'm going to do with both of these stocks. Guys, this is Market Signal. I am Kevin, as you know. Thanks for watching the video. I hope to see you on the next one. I will drop it after the closing bell tomorrow, but give me your thoughts below, and thanks for your support of the channel. Have a great night.